Roses are red, violets are blue. You can offset your tax liability by paying your kids, too. Welcome back to the Banking Bros Conversation and Podcasts. We're your hosts. I'm Jay Dew.
And I'm Jonah.
We're walking and talking through the essentials to creating code-cracking cash flow for you and yours. And now it's a family episode. So we're actually getting into the holiday season, so I think it's appropriate to check in with everybody's families.
We are in the holiday season, yes. I'm excited about it. It's a big time to hang out on the couch, actually. You get a few couch days in there, which are really actually nice for me.
You start to, is today Saturday?
Yeah.
Was yesterday Saturday?
Today's only Thursday?
Let's go.
There's two more? It's good.
All right. So blessings to you and yours. We record this in the last week of November 2024. So we're getting ready to celebrate the Thanksgiving season. So we're going to be eating real good for the holidays coming up. So we're thankful to have you as listeners to our program. And we're going to talk a little bit about how we can have financial freedom and a foundation with our family around the food, folks, and fun. Do you remember that tagline from back in the day? You too young for me. Food, folks, and fun?
No. Why would it be folks? I don't even understand who that would be.
I think it's
food and fun. Sure, it could be anything at this point.
Right.
Folks.
Food, folks, and fun.
Understand.
I'm going to look it up here while we're chatting.
Cranberry sauce people. It's
no,
not
no.
The turkey people.
It's not specifically Thanksgiving.
Oh, okay.
Okay, but guess major
holidays?
U.S. brand. Major U.S. brand. I'm going back.
Pepsi, Coke.
I believe it was Burger King.
Okay, the reason I said Coke, I did not realize.
No, it was McDonald's.
It was McDonald's.
It was McDonald's.
Family, folks, and fun.
Food, folks, and fun.
Food, folks, and fun.
I think.
So here's what I realized recently. I thought this was pretty cool. This is just a sidebar for anyone who cares. Apparently, Coca-Cola was a summer drink, and they were hemorrhaging. That's not the right.
Hemorrhaging.
Hemorrhaging money during the winter. So they ran a marketing campaign to get their sales up during the winter. That's why you've seen the Coca-Cola polar bear commercials.
Let's go.
And Santa drinking the Coke. And successfully, their marketing scheme and campaign transformed Coca-Cola into an you're allowed to drink this all year round. It's the drink of the party campaign. But
Look at that.
But it was like,
I guess so. This is around. This is probably
something.
around the 40s or 50s.
It was a long time ago. But it was something like 10 years straight.
Yeah.
Like we lose crazy money during the winter holidays. We have to do something.
So let's give it to the jolly old elf.
And so I was like, wow, that's crazy because obviously Coke now is like a staple. I don't generally drink it, but it's a staple.
Oh yeah, you're right. I don't think of it as only quench my thirst in the summer.
Yeah, and I'm like, you know what? It's refreshing, and I'm like, oh, but if you're refreshing, that probably is a summer drink. It's supposed to be hot
100%,
outside,
yes,
and refresh you. But I'm like,
and you probably didn't go to the soda fountains and get it from the soda jerks when they used to put the syrup in the thing and spin it. You probably didn't do that in the winter,
right?
Yeah, that was like summer break.
Yep.
You go hang out with George Bailey. And you remember at It's a Wonderful Life?
No.
They went to the soda counter.
I don't like that movie.
Get out. It is holiday
I've only
season.
seen it
I'm
once or
going.
twice.
Also, I just realized that that's a winter movie. It's literally Christmas, right?
Yep.
Okay, so
Thanksgiving movies?
Thanksgiving the greatest Thanksgiving movie that there is has to be Charlie Brown.
It's a Great Pumpkin? The Great... What?
No, it's Halloween.
You're right. No, it's not.
The Great Pumpkin?
Yeah,
Wouldn't that be
It's a
Halloween?
harvest. It's a harvest time film, if you will. What's it called, though? It's the Great Pumpkin, Charlie Brown?
Yeah, there's something about a great pumpkin is in there for sure. Right.
Is there just a Thanksgiving Charlie Brown movie? No, I feel
I'm
like
trying to think of any Thanksgiving movie.
That's what I'm saying.
Any Thanksgiving movie.
That's what I'm trying to say.
Because the holiday season definitely got longer. The holiday season started...
a Charlie Brown Thanksgiving.
A Charlie Brown Thanksgiving. That's what I'm saying.
1973.
Yeah, for sure.
And
type in Thanksgiving movies. Ladies and gentlemen, what do you like to do on Thanksgiving?
I
didn't realize.
Pumpkin Charlie Brown.
It's the Great Pumpkin Charlie Brown.
It does look a little
that's
Halloween-ish.
Halloween. That's Halloween. Okay, so a lot of people get into football around Thanksgiving. We didn't grow up in a football-heavy family. So playing football outside with the cousins and grandma and all that stuff, keeping score, was not a part of our upbringing.
Right.
But nowadays, we like to get together with the family. This includes 3 generations now. Our generation, there are 6 of us in the sibling generation. Several of us have families. There is mom and dad, and now there are 11 total grandchildren.
Nice.
We're going to talk about those kids here on this episode. I have 4.
I've got 3.
And our brother between us, we're actually brothers. Our brother between us also has 4. So 4, 4, and 3 is 11. That's it. Unless there's going to be new announcements from somebody
Let me know.
over the holiday. So we're going to talk about how we can incorporate some of the family values. When you get together, it hopefully is not knock down, drag out. It hopefully is a time of reflection of the great blessings your family has been able to experience, all the fun that you've been able to achieve, and your holiday season is filled with a bunch of smiles.
I got a question for you.
Yeah.
Would you rather hire your kids in your business or hire an outside hire?
Well, that's exactly what we're getting into.
Well,
So-
the reason I asked it is because our last podcast episode was all about would you rathers. We had 5 different would you rather situations. They were a little, some of them were a little easier for you to answer. Some of them are a little tougher to answer. If I remember correctly, there were 2 or 3 that were a little tough to answer. But if you didn't listen to that last podcast episode, you should go back and you should listen to it. It's called Would You Rather. It's on YouTube if you like to watch things. It's on any podcast listening service if you like to listen to things. But that's what we talked about last time. And this time we're going to talk about incorporating the family, right? Incorporating who you're thankful for into the family business, into what you do, how you can do it, and some of the things that go into it.
So if you like topics like this, you're going to want to subscribe to our channels. The Banking Bros here on YouTube, if you're watching us, is a great place to ring the bell. School's in session. We're going to talk about how you can go from kindergarten up to financial graduation. That's what it's all about. So go ahead, like, subscribe, and comment. We get to those comments often on Thursday afternoons, Eastern Time, noon.
That's right.
And we answer them live if we don't get to you fast enough by just typing it in to the response channels. Also, we have got our TikTok channels, 2 of them, the Cash Compound and the Banking Bros, Instagram at the Banking Bros, and Facebook. We've got a couple of pages and a group for you. That private group is called Infinite Bankers. We're live in there on Thursdays, walking and talking through code cracking cash flow for you. Ask your questions to the Banking Bros and our coaches here at the Cash Compound. We're going to get into a great conversation about your financial future very soon.
Yeah. Before we jump into our episode and talk about some essentials, some things that you've got to know if you're going to employ the kids, let's give a quick shout out to our fan follow of the week. So this week, our fan follow is Travis Neal. So I think on YouTube, that's TNeal81. So over on YouTube, I think they also call them subscribers. So I appreciate Travis for subscribing to our channel. He's a recent subscriber. When you subscribe, does it automatically hit the bell for you?
We keep asking that in the last couple of episodes.
We should probably go.
I don't think so.
Okay, we should. Well, Travis, we
feel like
appreciate
I'm
you subscribing. And what that means, Travis, is that hopefully you're seeing this. And so if you get the shout out, you should know that we want to hear from you. Put your questions in the description. Put your question, not in the description, in the comments, right? Put your question in the comments. We'll come back and we'll make sure that we answer it. Whether we type in the answer, we get it on a Thursday show where we answer all the questions. We'll make sure that we do. We'll let you know that we answered it, but we appreciate you being here. Thanks for following.
Jonah, you asked me a question. Would I rather hire my own kids or an outside person
That's right.
in my business? Number one, my kids can't do everything. Some things outsiders have to do. For instance, both of us have entered and forayed, if that's the right use of the word,
Not sure.
into virtual assistants.
Yeah.
My kids cannot pull off that stuff.
Not yet.
Not yet.
They're just too young. So
Yes.
I agree. We need an outside hire for that.
Yes, and there are plenty of things that they can do, which we will get into here today. But they are not good video editors. We obviously have a lot of that going on. You're watching it right here. We have audio engineers as well, and our producer, Will. They cannot pull that off. Now, Will's children can because they're teenagers. My kids are younger and smaller. Yours are aggregate younger and smaller than mine.
Yep.
And so there
I
are
don't know about
jobs.
smaller.
It's
some of
true.
my kids are bigger
I have
than
an
your kids.
8-year-old who is just not getting taller at all. So now your 6-year-old and my 5-year-old, they're getting asked about being twins all the time.
Yeah.
And there's a decent gap between them.
Yeah.
Okay, so what we're going to walk and talk through here, ladies and gentlemen, is how to be efficient in the money that you make. The dollars that come into your life, I think you should keep them. What we talk about and walk through here, utilizing the infinite banking concept, is often trying to help you understand where to place your dollars, where to put them, where to store them, and where to warehouse them so they're the most efficient for you. Taxes are some of the biggest expenses that you will ever pay throughout your lifetime. So being efficient with the U.S. tax code is important to your wealth.
That is true.
So let's talk about how we can incorporate that wealth into your family and pass down a legacy of stewardship and of business growth by putting your kids in your business. We hint at this often, but now we're going to get into some of the nuts and bolts. Jonah, most people out there do not have businesses, so first let's start there. Why is it important, and how efficient can you be owning your own business, first off?
Yeah, there was a tax professional that we used to work with that said that, or they've got a book or a web page or something that said you'd be brain dead not to own a home-based business. And that's a little harsh, right? But because if you don't know, you don't know. But the reason that they said this is because of all the tax breaks that are afforded to business owners. And so one of those tax breaks, like we're going to talk about today, is an IRS tax code where it talks about compensating family members.
Yes.
Right? So that's one of the reasons, kind of go back to the quote or the book title or the webpage title that they said, is because you don't realize how many tax breaks you can get by owning a business.
Right.
Whether it's home-based, whether it's affiliate marketing based, whether it's brick and mortar, you know what I mean?
And why those affiliate? We were in a network marketing community where we learned of these systems with this tax professional, but that was always brought up because it's the simplest, lowest overhead. It's
the lowest hanging
Like you
fruit,
can just sign up for something for $100, and now you've got a business. Now you're going to want to try to make effort in making a profit. The goal of owning a business isn't to reduce your taxes. The goal of owning a business is to make money. But if you do it well in the right way, you've got to realize that the highest taxpayers are folks who have W-2 jobs.
Yep.
That money is coming automatically out of your paychecks.
Can't do anything about it. They know
And
how
it's
much you
going
make.
straight to our very inefficient government. Be sure to check out our upcoming one-on-one video that I'm going to go through talking about this new department, the Department of Government Efficiency.
Elon and Vivek.
All right, so Doge, we've got a video coming out on that, so look for that maybe in the description here, and we're going to talk a little bit about that. But people generally in the 20th century became workers in big bureaucratic organizations.
Yep.
And then over the course of 1913, the tax code came into play. 1933, the taxes started coming straight out of paychecks.
That's right.
Folks didn't realize anymore, because the money never hit their bank account, how much money they were actually giving away from the dollars that they earned.
A lot.
Tons. So I've heard, Jonah, that the tax code is around 11 pages.
I have heard that also.
And the tax exemptions and deductions and why we might not tax you on your income is around how many pages?
I've heard it's like 11,000 or
Correct,
something.
11,000. Let's get into one or two of those that are very, very common for most people. If you decide to own your own business, we're talking about an LLC here, probably a sole prop or a partnership, one of those entities. You might want to hire your own children if you have them. If they are 17 and under 18, they're not in the majority. There are tons and tons of ways you can offset the tax burdens that you have as a family business owner and still control the dollars. One of the words we love around here.
Yep.
Keep control the dollars because your kids legitimately worked for them. All right, Jonah, help us understand, what is that IRS revenue code, actually?
Yeah. So again, most people don't know the revenue codes. I don't pretend to know the revenue code.
401k
but
is
I
like
do
the
know.
only one I know. 529 401k.
Right. 403b. I know
7702.
There you go. But I am not. I'm pretty good at Google. So for this specific IRS revenue code, for all the geeks and nerds out there who really need to know, it is IRS Revenue Ruling 73-393. And of course, it's all IRS lingo. That's really tough to understand if you actually go read it. But here's the summary. It discusses compensation for your family members, particularly your children, within the business setting. So the ruling emphasizes that payments made to family members must align with fair compensation and actual work performed, which it then has to be comparable to what would be paid to an unrelated individual. So you can't say, oh, because my kid's working here, I'll pay them you know what I mean? You have to be comparable to what you'd pay for someone else for similar services. And what that does is it just ensures the legitimacy of the deductions for the wages paid to the children or the family members. So if you put that into layman's terms, basically put, in this year, 2024, you can pay, how much is it?
Up to the standard deduction,
which is, I believe,
$14,600
to your children. And then, of course, the children don't have to report income tax on those dollars.
So we are talking about actually having your children as a W-2 employee.
That's
okay?
right.
So that's what the IRS is talking about. So this is not a 1099 or a contract employee.
Yep.
This is a worker who's a W-2. So we just poo-pooed on W-2 workers for a second and told you they were the highest payers of taxes, but your own kids don't have to pay anything. So there is, I'm going to get this wrong, so don't quote me on this one, but it's FICA, Medicare, Social Security, whatever, the federal ones.
You can group them. So FICA is like 2 or 3 things.
Okay.
And FUTA is the other 2 or 3 things.
Okay.
So if you say FICA and FUTA, you got them all.
Got it. Okay, so that on the federal level is what your kids are not liable for.
That's right.
So if they are now paid up to that standard deduction, that doesn't mean you have to pay them that amount of money or only that amount of money. But once you get up to the standard deduction on each individual child, as an employee of your own business, mom or dad has to own that business.
Yep.
Now we've been able to retain the dollars inside the family. Who owns the bank account? It's actually going to a bank account from those kids. Who owns this bank account?
The kids have to have their name on the bank account, but that also means you probably have to have your name on the bank account.
100%. You're a custodian.
Because banks are not going to allow people under 18 to just own the accounts by themselves.
Yep. So you've still got control of the dollars. It's gone to them, and now the dollars can be used for whatever the family is into. It might pay for the things that the kids cost the family anyway.
Yep.
This could be school supplies for you or school tuition.
That's right.
We've got private school running through our veins.
Tuition in my house. Yep.
What are some other things that normal expenses that the kids cost mom and dad, but now the kids actually have money in a bank account that can pay for it?
We do the costs of the sporting stuff, right? For little kids, you got $100 to do the Y basketball and $250 to do the Saturday morning soccer, and so we pay for those things from these kids' bank accounts that from the money that they've earned as the W-2 employees. We do the school tuition. There's a few programs and piano lessons. There's a few things that we have or subscriptions that we have that's like, this is not mine. This is for the kids. The kids also like to do, my son's getting older. He likes to do stuff. I'm not paying for his stuff. Like you worked.
Do stuff.
You worked. You know what I mean? You've got money in your account. Why in the world would I pay? I don't need to go to that thing that you want to go to so bad. You know what I mean? And so we pay for a lot of stuff like that. There's lots of options.
Clothes.
But
I'm
really
just saying like regular things, a bike and clothes and things like that, right?
Right.
So it's going to cost mom and dad anyway, and now we can offset that. Now, let's talk about some of the parameters around how this works technically.
Sure.
That's what people have a question on, and this is your one-stop shop to kind of understand, ladies and gents. Here are some of the things that are the guidelines. Number one, I mentioned that mom and dad own a business.
Yep.
And 2, the kids are employees, W-2. So that means we want to have some sort of job description and a role, right? And depending on your state, you may have to report that. Our state, the last year or so, we started having to report what the role was of the employee.
Yeah, this year was the first year we also
Yeah.
had to report who owns our businesses. You
Yeah,
had to report
that's a federal
That was-
thing, though.
That was interesting.
Yeah, it's
Was
so
it, it was just this year though.
Yeah, so you have to be compliant. But remember, to be compliant, we're gonna cite a couple of things. Jonah's gonna read them off. There's three main things that you want to be conscious of when you are planning for this tax strategy and efficient family business use. So, Jonah, hit them.
So the three things are fair market value, actual work performed, and age appropriateness. So we'll kind of jump through all three of them together. So fair market value, we talked about that a little earlier. What's your layman's definition for fair market value?
Okay, I know that you've got some things here,
Yep.
but I will just do it off the cuff. Fair market value. So this is, you mentioned it before, this is you are paying for this employee's work at a similar rate to the marketplace, fair market value. So
right.
that means if there's secretarial work going on with one of your children. I have a daughter. She's 10 years old. She's by far the smartest one. She can do more things.
Oldest one.
The oldest one, right. So what we've got here is a $10 an hour job. Let's say. So that's going to be fair market value. Everybody knows that you can find work for $10, $15, $20 in secretarial work. I would not be able to justify, in the event of an audit, $100 an hour for maybe clerical work.
Right.
Yeah.
Right. So again, example, $10 an hour for filing, $20 an hour for social media content posting, that's fair market value. That's what these roles cost. So it's got to be the same as you'd pay an outside source. The second.
Now, I'll also say, my children, the rest of my children, my boys, are all younger than that. There's all sorts of regular office type work they cannot do. Right? They're not doing data entry.
Right.
Because they cannot type at this point, and we're trying to get our letters right.
So that's the third one that I mentioned, but we'll just talk about that next, which is age appropriateness.
Okay,
right?
great.
So you've got to assign tasks that are reasonable for your child's age, right?
Right.
So if you've got younger kids, maybe that's a lot of file shredding. Your kids do a lot of file shredding.
A lot of paper shredding in the office. So we've got videos for that. We're probably going to show them to you in a sidebar if you're watching.
Yep.
We get lots of mail.
Lots
in
of
our
mail.
business.
Yep.
Right. Tons of mail. And my kids definitely do office cleaning work.
There you go.
The boys.
That's what's coming
yes.
next. Shredding, cleaning.
Shredding, cleaning. They make messes in the office as well. So they have to do a lot more cleaning. They can do vacuuming.
Yep.
They can.
It's all sorts of anything.
Trash. They do trash,
you can
right?
wash
Janitorial.
windows, you can dust. You can. There's all these things that we would. In order to own an office, right? We're sitting in our podcast studio here. For anyone who's watching, of course, you probably assume we've got a little bit of studio. If you're listening, there's a table in here. At some point, someone should wipe it off. You know what I mean?
Exactly.
So you'd have to either do it yourself, or if you own a big enough business, you need to pay someone to do that.
Right.
You're probably not going to say, "Oh, come in one time, one off. I'll give you $5 to wipe my table." Right. You're probably going to say, "No, this employee's job is now to wipe all the tables, clean all the windows, clean the bathroom," right? And so because of that, now we need to pay them appropriately, which we just talked about, fair market value. So if you were going to give someone else $10 an hour to clean your office, you're allowed to give your child $10 an hour to clean the office. And then it's got to be age appropriate. If your child is 1 year old, you probably can't justify that you paid him the same $10 an hour to clean the bathroom. They can't stand up yet, right? You probably can't clean the bathroom. So if you've got bigger kids, maybe teenagers, right? There's some other things that you could do. You could do data entry. You could do customer service. You could do graphic design or social media management or planning or calendars or however that works, right? Because the older kids can normally do that stuff. So again, if you could pay someone else to do it, and again, depending on how good you get, now we can talk about the fair market value going up. You can pay them a lot more. So again, the whole point and purpose of this is, right, to retain the dollars in the family and not have to pay the taxes, the FICA or FUTA tax, the federal stuff, the Medicare, the Social Security, you don't have to do it. And so that's a big, big, big advantage. I can keep the money. I earn the money as the business owner. I kept the money in the family by giving it to the kids. I can then use the money, or the kids can use the money to pay for stuff that the kids were going to do already. And I can give them X amount because that's fair market value and age appropriateness and things like that.
Right.
Which is really cool. So the last thing that is very important, like the essentials in order to pay the kids appropriately, is actual work performed, which is very... so how would you describe that one? I've got a little summary. I've got that the kids must contribute to the measurable work in the business, but how would you say it a little bit better if you have one?
Yeah. So for me, I'll break it down to some things that I've been doing for several years, and it just fits into all three of the other two.
Yep.
Is they are models often.
Yeah.
So actual work performance, especially the younger that they show up in the social media. My company, my LLC that I own, that I pay them from, is a marketing entity.
Yep.
I market for the Cash Compound. I market for several other brands. My kids end up being models.
Yep.
So we've done stuff for Gerber several times, and they've paid money or they've given us gift cards and things like that.
Yep.
Currently, my kids are in an Adidas ad. They're in an Adidas ad.
Which is fun.
Right now. And we've got these little figurines. For those of you looking at us, we've got the shrunk 3D statues, the figurines. My kids have been... they've received statues. We've been models for this, and that's shown up on their platform for my friends over at Shrunk 3D. So several different things that they've done, and this is actual work performed because they are models. And modeling is being in social media, being in videos, being on the podcast before, taking pictures and things like that, and promoting the business. So there's also a connection between how much money we earned by doing that.
Yep.
And them being the actual models or talent.
Which helps with the fair market value.
We got paid something. We actually, several years ago, literally did a video campaign with the kids, the Adventure Squad out there, and the Adventure Squad was paid near $40,000 to do a video series. And the kids are the main. It was a family event. We go to the park, we go to the zoo, and all this type of stuff. And we were paid tens of thousands of dollars to produce this. And there were all obviously costs, but the kids were the actual
stars
talent.
of the show.
They were the stars.
Yep.
Yeah. So you can watch those on YouTube.
So this is important for everybody listening. What do you have to do? What do you have to keep? How do you file this appropriately so in the event of an audit, you've done your due diligence? And to my understanding, there's really two things.
Okay.
Might even just be one thing that you've got to maintain weekly, monthly, annually, so that way when the IRS comes knocking, if they come knocking, right? Which you heard they hired all those auditors.
A couple of years ago, I think it was under Joe Biden's administration here. It was like 185,000 new auditors,
which was crazy. I thought they were just going to audit.
I thought they were coming. Yeah, I thought they were coming for them. Maybe they still are after this episode.
Right. But you've got to maintain a work log, a timesheet.
Yeah.
Is what you've got to maintain. Very, very, very similar to any other employee that you'd hire.
Yeah. What are their hours, or what's their job description? They are employees, so what's their job description? And then how would you, in the event of an audit, it doesn't have to be scary. If it can be justified, this is what happened, this is who the employee is.
Yep.
And of course, you're following those three things that the IRS said. Number one, fair market value. Number two, age appropriateness. And three, actual work.
Yeah, so you've got to keep a work log. A lot of times people let this part slip because it's their own kids, right? Oh, it's my own kid. I don't have to do all of that stuff. That's just not true. Not if you want to successfully pass the audit. Not if you want the IRS to come knocking, if and when they come knocking, and you to say, no, I followed all the rules and the guidelines. I'm good to go. If you don't, of course, the ramification of that is they're going to make you pay the taxes that you didn't pay.
And penalties.
Right, and penalties. They're going to say you should have paid it 3 years ago. You didn't. Here's all the interest and the penalties because you didn't pay it when you were supposed to.
Right.
Meanwhile, of course, you were like, well, back when I thought I was doing it all correctly. So make sure you maintain that job log. Very, very similar that you do for anybody, any employee that you've got, but you've definitely got to do it for the kids. Don't let that part slip. That way you don't get in trouble. So.
All right. So reminder, ladies and gentlemen, this number, 2024, is a moving number. Standard deduction changes.
That's right.
Most years. So be looking for new information and do your homework with your tax professional in 2025 to make sure this is right for you, your business, and your family.
Yep.
We have a tendency, of course, to pay our children as much as we possibly can justify for their their work and then utilize some of those dollars that are now not taxable to dad and mom in a higher tax bracket to fund their infinite banking system.
There we go.
The family banking system is now utilizing non-taxed dollars to load up for their future and for their today.
Yeah.
We're going to leverage those policies by putting pre-tax dollars into them efficiently and, of course, utilizing them even more for maybe investment opportunities now or paying off debt that the family may have. And don't forget, it teaches stewardship to your family. It grows the business. It helps the legacy planning so these folks can take over one day when I'm too old and gray to keep doing it myself.
That is correct. That's really important to people to understand. You want to use pre-tax dollars from situations just like this to fund your infinite banking policy, because then those pre-tax dollars get to grow uninterrupted, right? You then get to leverage and use cash value. No tax. You then, when the benefit pays out, eventually it passes on to the family. No tax, right? So now we can eliminate Uncle Sam from these dollars, which is really, really helpful. That way, what it does is give you a significant amount of peace of mind, because it doesn't matter who gets elected and what they do to the tax code and what changes and the tax brackets that are going up it doesn't matter, because the money that I'm using to accomplish the things that I need for my family doesn't have to go through that system, which is really, really interesting. There was a former justice, right?
Supreme Court justice or tax court justice.
Learned Hand that's got a really famous quote. The quote is, there are two systems of taxation in our country. There's one for the informed and there's one for the uninformed. What do you think about that?
I love that. When we're talking about the founder of the infinite banking concept, he said very similar things, R. Nelson Nash. So I love this former court justice, because Nelson Nash also said, if you know what's going on, you'll know what to do.
Yeah, that's right.
Yeah. So we want to help you guys understand that this is not our opinion. We've read tax court citations for you. We've had IRS code and a judge in this case help you understand that no matter where you're starting today, and if it's from the uninformed standpoint, you can become learned, just like this man's name. That's I get right. Learned hand?
Learned
hand? Leonard?
Learned.
I mean, that's what it looks like, but
that's
I'm saying
what his name is. Learned.
This man was learned.
Goofy. Anyway, I also made a YouTube video that you could go watch. We'll put a link to it if you're watching us on YouTube. If you're not, the video is called I forget the name, but type in on our channel, which accounts to max out. I've recently made this video in the last month or 2 months, and I talked about what accounts I go through and max out. Today's episode was talking all about one tax efficient way to make money, right? To keep money, to keep more of your money without paying taxes. We quoted the tax code, but there are other ways to do it. There are other ways that we do it. We talked about one specifically in this video. I talk about a different one in that YouTube video. You should go watch it.
Ladies and gentlemen, we look forward to having a cash consultation with you. Remember, the next step after you grasp onto something that we've said here in our system at the Cash Compound, the Banking Bros want to have a one-on-one phone call with you. That is a free consultation, and we're ready to have it around you and yours, your kids, coming up before the year is over. If you want to have that conversation, you may be able to have some efficiency before you file federally in 2025.
You are now tuned to the Banking Bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.
As the year comes to an end, we always want to give time to be thankful for our family, for our friends, for our businesses, and for so much more. In this podcast episode, we talked about not only being thankful for the kids, but being able to reward them through your business tax-free. So if you've got kids in your family business, if you own a business, whether that's a brick and mortar institution or something online, you've got to know how to efficiently eliminate taxes from some of your equation. And that's what we talk about in this episode, paying your kids and the way to do it to make sure that you can do it effectively and efficiently, and then what to do with that money once you've got it to their accounts.